Nvidia and other chip stocks surge over 5% Thursday as tech led a market rebound. Joining us now with more on the sector is BofA Securities Senior Research Analyst Vivek Arya. Vivek, great to have you with us. I know we highlighted the 6% gain that Nvidia saw yesterday, but if you take a look for the week, Nvidia is actually underperforming the Philadelphia Semiconductor Index. Nvidia's down about 2%, and the SOX is up almost 3%. And there have been doubts since probably that June 20th key reversal date where Nvidia shares hit a new high and then closed on lows, where the stock has really been struggling. So where do you come out on how the stock is valued and if there was just too much hype in the stock?
Good morning, Melissa. So I think practically speaking, whether it's NVIDIA, whether it's the rest of the semiconductor space, we could stay volatile until NVIDIA reports later this month, and we have the required reset in any delays associated with their new Blackwell chip, which I think is actually not that big. But if we take a step back, we have to separate what's happening in the market from the fundamental side. I think what's happening in the market and the volatility has nothing to do with semis. But this is where all the gains were because AI was the best game in town. And that's why these companies saw the most drawdown also during this volatility. But let's look at the fundamental side. Number one, every one of NVIDIA's top customers, whether it is Amazon, whether it is Meta or Microsoft or Google, they all said they are investing more, not less, in AI. Number two, if you look at NVIDIA's top supplier, Taiwan Semi, they had very strong outlook. In fact, this morning they gave very strong guidance for their last month of results. And number three, if you look at NVIDIA's top system partner, Supermicro, I know they got dinged on the margin side, but if you actually look at the sales growth that they showed for the next 12 months, up 90%, that is 2 times what people are modeling for NVIDIA's growth, and NVIDIA usually outgrows them. So I think the fundamentals are still extremely strong, but the market is going to go through its volatility, which we think should subside by the time NVIDIA reports its results, because the fundamentals are very strong. And the final point on valuation, if I take the Mag 7 outside of NVIDIA, they are trading, and the broad market, it's trading roughly 2 times its earnings growth for next year. NVIDIA is trading 0.8 times, right? So it's trading less than 30 times for over 35 to 40% earnings growth. So I think fundamentals are strong and valuation is still very compelling.
In a whirlwind turn of events, NVIDIA has found itself in the eye of a veritable financial storm. The semiconductor giant, known for its cutting-edge work in artificial intelligence, saw its stock plunge below a crucial support level, catching the attention of traders and market commentators alike. At the heart of the chaos lies a theory that's as tantalizing as it is unsettling. Are short sellers behind this orchestrated descent, and is there more to the story than meets the eye? In recent times, Jim Cramer, the charismatic host of Mad Money, has cast a spotlight on NVIDIA's woes. With the stock closing at a precarious $98 on August 7th and a sizable 15% drop over the week, insiders and analysts are scrambling to make sense of the market's antics. Besides NVIDIA, another heavyweight, Eli Lilly has also captured the bearish crowd's curiosity. What does this bearish frenzy mean for NVIDIA? And could there be a silver lining amidst the market storm clouds? Let's find out. But before we do that, if you want to keep up with the latest NVIDIA updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. That said, back to today's video.
Unless there's a doubt on the earnings growth. and I guess that's the key part of the equation where we'll get some more guidance from NVIDIA. In terms of the reports of the delay to the Blackwell chip, the reports first came out of the information. And I'm wondering, it's interesting because when we hear about delays to other hardware items, you think about it, is it going to be a sale denied or a sale delayed? So in your view, these are sales that will be delayed, correct? That these sales will actually happen. It's just maybe it's pushed out a quarter, 2 quarters, whatever.
Yeah, so if we look at demand for NVIDIA's Hopper product, which is the product before Blackwell, demand for that is off the charts right now. And that's what we heard from Supermicro. They got it well above consensus, and a lot of that is actually based on the Hopper product. Because we just have had this period of insane supply constraints in the industry. And just because Blackwell is delayed a little bit doesn't mean the supply constraints have gone away. So any customer who can put their hands on Hopper is still able to buy that product. Now, when it comes to Blackwell, there are many different versions of Blackwell. The most extreme versions that are in the highest, most densest version of the rack scale architecture, they are perhaps pushed out by a quarter or so. So that I think can be reflected in numbers. But when it comes to other versions of Blackwell, I do think that they will start to ship some Blackwell later this year. But the key point is that demand in combination of Hopper and Blackwell, I still think is extremely strong for them.
Jim Cramer's vocal observations have thrust the bearish activity surrounding Nvidia into the limelight. In an X post on August 8th, Cramer candidly addressed the short sellers' significant impact on Nvidia's share price. He hinted at the possibility of insider information fueling this bearish spree, essentially giving shorts the ammunition they need to crush Nvidia. When Cramer speaks, Wall Street listens, and his remarks on Nvidia and Eli Lilly highlight the broader market implications of bearish onslaughts. Cramer stated, "Bears looking for easy money are betting big against Lilly and Nvidia once again. Those are the two keys to this market, and don't you know it?" It's worth pausing here to appreciate the symbiotic relationship between these two seemingly disparate stocks, one a pharma giant, the other a tech titan. His comment points out the nuanced ways in which different sectors can affect each other, a complex dance that often leaves retail investors wondering if they're just being led astray. Moreover, MarketBeat provided some illuminating data on Nvidia's short interest as of July 15th. The report indicated a short interest of 280.30 million shares, marking a 6.70% decrease from the previous month. This might suggest that while Nvidia's shares are under pressure, the bearish sentiment hasn't reached apocalyptic levels just yet. Adding another layer to this narrative is Nvidia's short interest ratio, which stands at 0.7 days, based on an average trading volume of 456.16 million shares. In layman's terms, short sellers could cover their positions relatively quickly, indicating that market sentiment may be gradually shifting in favor of Nvidia. It's like the market having a few more tools up its sleeve, ready to counter the bearish brigade. And at the moment, Nvidia is viewed by many as a meme stock, which would definitely have a significant impact on the stock performance, especially in the light of the upcoming earnings report. But how? Hello everyone, and welcome back to Investocracy.
A fresh read from the chips this morning. Taiwan Semi reporting a 45% jump in July revenue compared to last year. That was thanks to strong demand for the company's AI chips. Shares are, well, they're bouncing around along the flat line here, but a big outperformer on the year.
Okay, one of their key customers, of course, is Nvidia, and that stock has been whipsawed this week. It's coming off what is its best day this month, but the company has shed about $1 trillion in market cap since mid-June when it was at its highs. Let's get more on that name and a bunch of other semis. Joining us now is Bernstein's Stacey Raskin. Stacey, always great to have you. You know, let's just start on Nvidia. Some of the news this week on the delays potentially as a result of sort of design issues around Blackwell. Just give me your take. Is it real, and what's it going to mean?
Yeah, it seems like it's real enough. There's enough smoke there. There's some fire. We've had some confirmation from other folks in the supply chain. Supermicro kind of alluded to it, and so it seems real. It doesn't seem major, right? It seems like a relatively minor design issue. It looks like they may have already fixed it. We've got maybe a 2 to 3 month delay, I think. What that really means is where people were hoping that like real volume shipments would happen in calendar Q4, it looks like it may be Q1, so it's a slight push out. You have to remember, this stuff is difficult to do, so I mean, like even NVIDIA is not necessarily immune to it. In the meantime, though, like we've had hyperscale CapEx guides that are all still going up. All of those would have incorporated whatever is going on. Like they didn't just find out about this, because of the news stories. They would have incorporated it. And NVIDIA's got strong demand for their existing architecture, which is called Hopper, and it looks like they're likely increasing production of that to try to backfill and smooth things over until we actually get the Blackwell launching in more volume, maybe a quarter later. But structurally, I don't think it's that big of an issue. Now sentiment-wise, clearly it's impacted the stock. I think the stock's been two things. One was there's just been a general reduction of sentiment on the AI space in general. People are just starting to look at lots of dollars are getting spent. They're wondering about where's the return. So the sentiment wasn't quite as supportive as it had been. And then you have this on top of it, which weighs on it. So I mean that's kind of what's been going on. But structurally, I don't know that anything really has changed with Nvidia.
Right.
We got a little push out. I think it'll be okay.
Nvidia's stock has shown some unique trading momentum. The fluctuating capital has inadvertently thrust Nvidia into the meme stock territory, a crowded stage often populated by equities with wild price swings and fervent online followings. For a company of Nvidia's pedigree, this tag could feel as unwelcoming as a snarky internet meme. This volatility could, however, set the stage for a significant rebound if Nvidia's upcoming earnings reports exceed Wall Street's expectations. Analysts remain largely bullish about Nvidia's long-term prospect, drawing attention to its AI capabilities as a cornerstone for sustained growth. Their optimism hinges on Nvidia's performance metrics, particularly how its AI chips prove monetarily advantageous for its clientele. Despite grumblings about a potential recession, Jim Cramer remains relatively optimistic, arguing that current corporate earnings do not point towards an economic downturn. While economic crises often tug at the market's heartstrings, Cramer's assertion suggests a decoupling between short-term volatility and the broader economic trajectory. For Nvidia, this optimism may well translate into a rallying point. With Wall Street analysts staying bullish on Nvidia's long-term growth story, a slight surge in positive sentiment could change the stock's trajectory. The convergence of favorable earnings, a dip in bearish bets, and an optimistic outlook could restore some of the lost luster to Nvidia's stock. So why Nvidia is worth the bet as the dust begins to settle? It becomes evident that Nvidia presents a compelling case for savvy investors. Despite the recent turbulence, the stock's current state and future growth forecasts paint a promising picture. Nvidia's stock closed at $98 on August 7th, but this price point, coupled with its AI-driven projections, opens a window of opportunity that informed investors wouldn't want to miss. Nvidia's commitment to AI provides a robust foundation for growth. As industries increasingly integrate AI into their processes, Nvidia's technological edge puts it in a prime position to capitalize on this trend. Their AI chips, which can potentially revolutionize various sectors, are already generating significant revenue for the company. So what is coming next for Nvidia stock? And should you keep investing your money? Let's solve this dilemma. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
First of all, since the peak of June, Nvidia stock has pulled back by nearly 30%. So that's underperforming most other semiconductor stocks that are exposed to data center AI. And the reality is that, even despite the concerns, the recent concerns on the company, the Blackwell delay, concerns around macro, we still expect Nvidia to dominate the data center XPU market. And we see in-house XPUs doing well as well, like companies like Amazon, Google are developing their own in-house XPUs. We also see alternatives to NVIDIA GPUs like AMD's GPUs also ramping, but we expect NVIDIA to remain dominant in a market that is growing very, very fast. And so I would say that we see little downside to expectations for NVIDIA's data center revenues. We see little downside to valuation, given the stock is now trading below the trough multiple of the 2018-2019 down cycle. And so that makes it a very good investment at the moment.
I want to talk about what we've heard from some of NVIDIA's biggest customers. As Shauna was mentioning, you've got Microsoft, Meta, Alphabet, and Amazon contributing about 40% of NVIDIA's overall revenue, and that's according to Bloomberg estimates. If Wall Street was frustrated by the AI ROI story that we heard from those four big tech names that I mentioned, couldn't that hurt NVIDIA too?
Yes, so I think the right way to look at it, so yes, you mentioned 40% of total revenues. NVIDIA actually also discloses, that the large cloud service providers represent, about half of their data center sales. If you look at how much CapEx for the top four hyperscalers is set to grow this year and next year, and you unpack that, between investments in AI, investments in traditional infrastructure, Well, it's true that we still need to see a bit further revisions to what consensus is expecting for capex growth next year to make room for Nvidia to be able to meet expectations, but not that much revisions, maybe 10, 15% actually. Yes, of course, whether capex can keep growing at such a pace beyond 2025 is a question mark. It will depend on the pace of adoption of generative AI-powered use cases. It will depend on the monetization of all the investments made over 2023, 2025. But reality is that even if we conservatively model a significant slowdown in investments in 2026, 2027 by these giants, that still makes room for good upside for all the names we cover exposed to data center AI spending. And so that's NVIDIA, of course, but also AMD, Broadcom, Arista, TSMC, Micron, and the list goes on.
According to Wall Street analysts, Nvidia is poised to recover and even outperform in the long term. The median price target for Nvidia shares sits around $120, suggesting an upside potential that should entice cautious yet optimistic investors. Their forecasts rest on the belief that Nvidia's blend of innovative technology and market positioning will drive its growth despite short-term market volatilities. Historically, Nvidia has demonstrated resilience and an uncanny ability to pivot in response to market demands. This adaptability is a testament to its robust business strategy and could be indicative of a strong rebound as market conditions stabilize. In the grand scheme of the stock market's fluctuations, Nvidia stands as a beacon of innovation amidst chaos. Its recent drop beneath the $100 mark has undoubtedly raised eyebrows, but it has also set the stage for a potential turnaround driven by its AI prowess and a bullish long-term outlook. What are your thoughts on Nvidia's current position? Do you see it as a golden opportunity to invest, or is the bearish pressure too significant to ignore? Share your insights and join the conversation on the future of one of the most intriguing stocks in today's market landscape. By staying informed and analyzing the trends, investors can make strategic decisions that align with their financial goals. As always, the stock market remains a game of calculated risks, but with Nvidia, the rewards might well be worth the bet. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for them is. If you would like to know Nvidia has been up to these past few days, go ahead and click on the next video on your screen. See you there.